In respect to water bodies or in respect to ships, we have a metal object that is called an anchor. This anchor, the purpose of this anchor rather, is to keep the ship stable, to keep the ship in a specific location, or to keep it stable during bad weather. Why am I discussing anchors? Why am I talking about ships now, or why am I discussing anchors today? It's because this is Wealthwise, and this is your home of financial freedom, where we learn wise investment decisions. Now, an anchor is an object or something that protects you during bad weather, or that keeps you grounded at a particular location. All right. In the case of ships, the anchor, once the ship docks, or maybe let me say talk about boats because I come from the lake. Once the boat docks, then an anchor is low, so that even when there are waves or the wind blows, the boat doesn't sail away or doesn't move away deeper into the lake. Now, in respect to investments, today I would like us to discuss what is referred to, or what I call, an anchor stock or anchor stocks. What's an anchor stock? An anchor stock is the stock, it's a stock that anchors, quote unquote, your investment. An anchor stock is the stock that you build your portfolio around it. This is a counter that you understand so well. This is a counter that is so strong in the market that it has the potential of withstanding bad economic times. An anchor stock is a stock that you have the intention of buying and accumulating for long term, not for short term, without selling. A stock that you know so well, you buy it and you have no intention of selling. This is a stock that pays good dividends. It has one of the highest dividend yields, or a very good dividend yields. It pays stable dividends, and it is not volatile in the sense that it's not 13 shillings today and 20 cents tomorrow, like Home Africa. And it is not 12 shillings, 1.7 shillings today and 20 cents the next day, yeah, or 1 month or 2 months apart. It is a stock whose dividend prices has been on a steady increase, and even if it was to drop, it is not a sharp drop. I mean, the counter is not volatile. All right. Yes, I know for a fact that the stock market is a volatile market. It's a high risk market. That is given. And that is why in this high risk market, you need an anchor stock. So what is an anchor stock? An anchor stock is the stock that anchors your investment in the stock market. It can be 1, it can be 2, it can be 3, it can be 4, but these are counters that you have full confidence in, that pays you dividends, consistent dividends year in, year out. They could be paying interim dividends or not, but it has consistent history of paying dividends over the past 5 years, over the past 6 years, but it pays dividends. The dividend yield is stable, or it's on an increase. Not paying 15% to this year, and the next year they have a dividend yield of 3 or 4%. All right. So that is what I refer to as an anchor stock. And it is important for you as an investor, whether you're a seasoned investor or you're starting out now, to identify the stocks in your portfolio which will be your anchor stocks. All right. Your percentage of holding of this stock is going to be significantly higher than the other stocks. This is not a speculative stock. It's a stock that is stable, that you have full confidence in it. Why do you need an anchor stock? Like I've told you, anchor stocks are the stocks that have consistent dividend payments. The anchor stocks is what is going to protect your emotion from speculation. I know there are investors who go into the market speculatively. Oh yeah, or the active investors who buy now, sell after 1 month, sell in 4 days, sell after 3 months. So the anchor stocks are stocks that you hold for the long time. Think 5 years from now, think 10 years from now, think 20 years from now. All right, think 3 years from now, you hold it for the long term. You are not selling it. So because you're not selling it and you keep accumulating it, this is a counter that you are guaranteed, or almost guaranteed, because it's not guaranteed that companies will always pay out dividends. This is a stock that you are guaranteed that for as long as that company is paying out dividends, you are going to get some good payment out of it. And it is this stock that you build your portfolio around it. You build your portfolio around it in the sense that you're going to the market, for instance, 50% of whatever amount you are putting into the market will go into these anchor stocks, and then the other 50% will go into the other stocks or your speculative stocks if you want to speculate, right? Now, what will happen? The benefit that will give you is that when in the unlikely event that these other counters, the volatile counters drops, or there's a market crash, the anchor stocks will shield you from that market crash. I am not saying that the anchor stocks are stocks whose share prices can never fall down. No. These are counters, however, the possibility, the frequency of their share prices falling down is very low. All right. At the same time, these are stocks that even if the shares were to come down, they will not come down significantly. You'll not be having 40 shillings and then coming down to 3 shillings. All right. How then do you choose an anchor stock? Like I have mentioned, you look at the counter's dividend history. Has the company been paying dividends? What is the dividend yield for this counter? A good dividend yield will be something above between 8% and above, or maybe 7%. But you pick whatever dividend yields you'll be comfortable with. Locally, I would recommend 8% and above, or maybe 9% and above dividend yield. And has this company been paying dividends consistently? Like myself, I prefer a stock that will be paying me interim dividends, so that I have at least 2 payments of dividends in a year. Something else that you look at is the company's financials. What is the company's gearing ratio? What is the company's capital level? What is the company's balance sheet position? Is there an improvement in the company's balance sheet? A historical improvement in the company's balance sheet? Is the company heavily in debt? There are a number of fundamentals that you look at in the company's balance sheet, in the company's historical P&L, so as to help you make an informed decision as to which specific companies you can pick. But it is important that when you're going into the stock market, even if you are already in the stock market, that you identify some counters which will be your anchor stocks. All right. I have had experiences where when I'm having one-on-one sessions and I ask, what is your anchor stock? Then somebody asks me, which anchor stock? What is an anchor stock? Yet you have been in the stock market for the past 5 years, for the past 2 years, for the past 7 years or 10 years, and you don't have an anchor stock. An anchor stock is a stock that protects your portfolio. It's a stock that stabilizes your portfolio. So let me ask you this question. Have you started investing in the stock market? Do you have any shares? Are you an active trader? Are you an active investor or a long-term investor? Are you a short-term investor or a long-term investor rather? Do you have an anchor stock? If you are investing in NSE, what are your anchor stocks? If you don't mind sharing with us, what are your anchor stocks? I will share with you my anchor stocks under your comment section. But what are your anchor stocks? And what is the percentage of what is your holding percentage of these anchor stocks? I mean, what percentage of your portfolio is in your anchor stock? Please leave me a comment in the comment section, and please do let me know what your opinion is on anchor stocks. My name is Belin. Thank you so much for tuning into your home of financial freedom, and let's meet on the next video.